This is, as Nicole kind of laid out here, the possibility of the fourth consecutive quarter that earnings have contracted. Gary Kaminsky joins us. You know him as the Morgan Stanley senior advisor. We know him as the co-host of Wall Street Week, which is back with a vengeance, thanks to this gentleman and Anthony Scaramucci. Gary, what is going on, first off, with this earnings situation? Should we worry if we look at a fourth straight quarter where things are contracting?
Well, Neil, great to be here and great to have Wall Street Week, obviously part of the family as well. So let's just talk about what Nicole just pointed out, which is that estimates are down anywhere from 9 to 11% on the S&P 500 in terms of earnings, obviously heavily impacted by what's happening in the energy space. I think the takeaway here is that if you looked at Alcoa, it was priced in that there was going to be a disappointment. So the stock action today tells me, and you always have to look at the stock action as it relates to what the expectations were and what the reality is that things are expected to be bad, but individual securities will be impacted specifically based on how bad they are as it relates to their guidance, as it relates to what they gave in terms of what their expectations were. And so it's yes, the quick answer is, Neil, earnings will be down. That's priced into the market, but individual securities will be impacted based on their own company specifics.
You know, Gary, we're looking at a strong market today, up almost 150 points. Yeah. But you had the big investor Kyle Bass of Hammond Capital, who's very worried. I want to play this, and maybe you could tell us what's going on. What are his fears?
Asia has a giant credit bubble that they've been building for the last 10 years or longer that has kind of reached its atrophy level, and it's going to happen over the next 2 or 3 years. So whether that causes the U.S. to have a brief minor recession, I think it's kind of 40–50% chance in the next year.
Scary stuff. That full interview, by the way, Gary and Company, airing Friday at 8 p.m. But, you know, that's sort of a party pooper here. I mean, everyone's sort of off to the races thinking we got all of this unsettled stuff out of the way. He seems to think otherwise.
Well, it's important. Let's remember that Kyle is one of the very few people in this country that called 2008 early. He also talks on the show about what he had warned the Bear Stearns Executive Committee in 2006, which is just some fascinating stuff. What he has said, and what he has said all along, is a slowdown in Asia, and he calls the China slowdown not a soft landing, but a hard landing. What's happening there is not only impacting what's happening with many companies, as we pointed out just now with Alcoa, but really is going to have an impact on the overall U.S. economy. And so he does say that there is a, not necessarily in the Trump camp, the Donald Trump camp, that we're absolutely 100% going to have a hard recession here later this year, but definitely in the camp that what's happening in Asia is slowing down the U.S. profits and has a good probability of creating a recession here in the States.
In the meantime, you're a savvy investor for a reason. You see opportunity in other areas or look around. You've been sniffing around looking at interest rates more particularly. Tell us what's going on.
And Neil, while we're looking at the stock market up today, and that's all because, once again, the Fed has hinted that they're going to move slow and they're going to stay away from raising interest rates, and that's had a positive impact on the stock market. I mentioned to you before we came on air, what blew my mind today is that I got word from a trader that we printed a 3.03% 30-year mortgage today. Amazing. So let's just remember and put that in perspective for viewers. 30-year mortgage, 3.03%. So there's a real disconnect between what's happening in terms of the stock market, which is levitating again because of the Fed, and the bond market, which I always have found over the last 30 years is much more reality. We're showing there a 30-year fix at 3.65. And as I said, there was a print today of 3.03 on a 30-year mortgage. And so interest rates continue to say, or they continue to tell the message that the economy is very weak and not growing at all very strong.
But real quickly, good for housing, you think, or no?
Well, definitely good for housing demand. The question is, as has been the question all along, the mortgage rates are there, but are people qualifying for the mortgages who actually want them?
You know, I'm not going to believe anything Anthony Scaramucci says. He says he's the star of the show. Maybe you are. We just got it all wrong. I'll talk to him.
Yeah, Neil, it's great to see you. And, you know, Anthony's got more hair than me, so we'll give him that. We'll give him that, all right?
We'll give him that. That's it. All right,
Good
Gary,
to see you.
Thank you very, very much. Neil.